Bitcoin headlines last Monday. XRP quietly moved 8% in a single day. Not because of a tweet, not because of hype, but because two separate real-world events hit at the exact same time, and the market reacted exactly the way it should when fundamentals actually line up. One of those events happened on the other side of the world in Tokyo. The other happened in a diplomatic room that most people weren't even paying attention to. And when you put them both together, what you're looking at is not just a price move. You're looking at a shift in how governments and institutions are starting to treat XRP as a serious financial asset. So let's slow this down and talk about what actually happened, because the details here matter more than the headline number. Japan's lower house of parliament passed a bill last week that most Western crypto media barely covered, and that is honestly a shame because it is one of the most significant regulatory developments XRP has seen in years. The bill brings major cryptocurrencies, XRP included, under Japan's Financial Instruments and Exchange Act. That's the same legal framework that governs stocks and bonds in one of the world's most financially sophisticated economies. What this means in plain language is that Japan is no longer treating XRP like a gray area digital asset sitting in some undefined legal corner. The government looked at it, evaluated it, and decided it belongs alongside recognized financial instruments. That kind of formal legal recognition from a G7 nation carries real weight, and anyone who tells you otherwise doesn't fully appreciate how cautious and methodical Japanese financial regulators tend to be. This didn't happen overnight. This was deliberate. The tax piece of this legislation might actually be even more impactful in practical terms than the regulatory classification itself. Before this bill, Japan had a top capital gains tax rate on crypto profits of 55%. That number is not a typo. 55%. Imagine making a solid return on your XRP position and then watching more than half of it disappear before it even hits your bank account. That kind of tax environment doesn't just discourage casual investing, it actively pushes serious capital away. Institutional allocators in Japan have been looking at that rate and choosing to deploy their money elsewhere. Retail investors who might have gotten involved years ago stayed on the sidelines because the math simply didn't work in their favor. The new legislation replaces that punishing rate with a flat 20% capital gains tax, which is the same rate applied to Japanese stock market investments. That single change flips the entire investment equation for Japanese participants. Think about what that actually means in terms of capital that could now start moving. Japan has a large, educated, financially active population with genuine savings and investment habits. The crypto market there already has meaningful retail participation, despite the hostile tax environment. Now that the tax rate drops to something comparable to equities, and now that XRP carries official recognition as a financial instrument under Japanese law, you remove two of the biggest friction points that were keeping money on the sidelines. Analysts following the Japanese market are saying this combination could unlock a wave of both retail and institutional participation that was simply not possible under the old rules. And XRP, with its deep existing ties to Japanese financial institutions and payment networks, is well positioned to benefit from that wave more than most other digital assets. While all of this was developing on the regulatory front, the broader macro picture was shifting in a major way on June 15th. The announcement of a US-Iran peace deal changed the mood across global financial markets almost instantly. The specifics of the deal included reopening the Strait of Hormuz, one of the most critical oil transit routes on the planet, and ending a naval blockade that had been keeping energy markets on edge for weeks. When a geopolitical pressure point like that gets resolved, markets don't wait around to process it gradually. The relief is immediate, and it shows up as a broad move into riskier assets across the board. Bitcoin climbed 2.68% on the back of that news. Stocks in multiple markets responded positively, and XRP, sitting at the intersection of that macro relief rally and its own Japan-specific catalysts, caught serious momentum from both directions simultaneously. That kind of convergence, where a broad market tailwind meets asset-specific good news at the same time, is relatively rare, and when it happens, it tends to produce sharper moves than either factor would generate on its own. The peace deal gave the entire crypto market permission to move higher. The Japan legislation gave XRP a specific reason to outperform the rest of the space. That's why the 8% move stands out when you compare it to Bitcoin's 2.68% gain during the same window. XRP wasn't just carried along by the tide, it had its own engine running at the same time, and that combination showed up clearly in the price action. Understanding that distinction matters if you're trying to evaluate whether this move was meaningful or just noise in a generally positive market day. The ETF flow data from last week adds another layer to this story that deserves attention. XRP exchange-traded fund products saw over $10 million in net inflows during the past business week. On its own, that's a solid number, but what makes it genuinely notable is the context around it. Bitcoin and Ethereum ETF products were actually experiencing net outflows during that same period. So at a moment when the two largest crypto assets by market cap were seeing institutional money leave their ETF wrappers, XRP ETFs were pulling money in. That's not a coincidence, and it's not noise. That is institutional investors making a specific, deliberate choice to add or increase XRP exposure through regulated financial products. When professional money managers are actively moving capital into XRP while trimming positions in Bitcoin and Ethereum, it tells you something real about how they're evaluating relative opportunity. The importance of that ETF flow dynamic goes beyond just the dollar figure. ETF investors are generally a different category of participant than the retail traders who drive momentum on social media. They're operating within investment mandates, conducting due diligence, and making allocation decisions based on fundamental analysis and risk-adjusted return expectations. When this group of investors is specifically choosing XRP during a week where broader crypto ETF flows are negative, it suggests they see something worth owning at current levels that others might be missing. The Japan regulatory development likely played directly into those allocation decisions. When a major economy formally classifies an asset as a financial instrument and simultaneously makes the tax environment significantly more attractive, institutional investors notice, and they act on it. The $10 million in inflows is the market's way of confirming that this news registered with the people who move serious money. There was a third XRP-specific factor adding to the momentum last week, beyond the Japan news and the ETF flows: the anticipation of a meaningful upgrade to the XRP Ledger network. The XRP Ledger already has a well-established reputation for speed and low transaction costs, but active development and periodic upgrades matter to sophisticated investors who are evaluating the long-term utility trajectory of a network. When the underlying technology of an asset is being actively improved rather than stagnating, it reinforces the case that the asset has genuine long-term utility beyond speculation. For XRP, whose core use case centers on cross-border payment settlement and financial infrastructure, any development that enhances the network's capabilities or performance speaks directly to the investment thesis. The upgrade anticipation added another layer of XRP-specific positive sentiment on top of everything else already happening. From a technical standpoint, the 1.20 price level became the focal point after XRP completed its 8% move. Volume during the surge was notably strong, which matters because price moves without volume tend to be less reliable signals than moves where heavy trading activity is backing the directional shift. The relative strength index over the 7-day window reached 80.88 during the move, which puts it in overbought territory by conventional technical analysis standards. That reading doesn't mean the rally is over or that XRP is about to collapse. Overbought conditions can persist during strong uptrends and often do when the underlying catalysts are genuine. What it does mean is that short-term traders should be thoughtful about the timing of entries, since assets in overbought conditions are more susceptible to brief consolidation or pullback, even when the longer-term direction remains favorable. The key technical levels that analysts are watching going forward are fairly clear. Holding and closing above $1.20 on a daily basis would represent a meaningful bullish confirmation. It would mean the price absorbed selling pressure at that level and buyers stepped in to defend it, which would set up a base for continuation higher. On the other hand, losing $1.14 as support would be a warning sign that the near-term momentum has faded and that the rally may have been a one-day event rather than the start of a sustained move. These aren't arbitrary numbers. They reflect areas where prior price action has established significance, and they give traders and investors concrete reference points for managing their positions and expectations over the next several sessions. One way analysts have been describing the anatomy of this specific rally is through the framework of macro beta versus coin-specific alpha. The macro beta is the portion of the move that XRP got simply by being a risk asset in a market that was moving higher on the back of the peace deal news, the same lift that Bitcoin, Ethereum, and most other assets received from the improved macro environment. The coin-specific alpha is everything on top of that, the extra performance that XRP generated because of factors unique to its own story: the Japan legislation, the ETF inflows, the network upgrade anticipation. That distinction matters because coin-specific alpha is generally considered more durable and more meaningful than macro beta. It suggests that XRP's move wasn't just piggybacking on a good day for risk assets broadly, but was actually driven by genuine improvements in its own fundamental picture. Stepping back and looking at where XRP stands right now against the backdrop of the last few years, it's hard not to notice that the narrative around this asset has been steadily maturing. The legal clarity delivered by the Ripple SEC case outcomes in the United States shifted the story dramatically from one of regulatory uncertainty to one of emerging legitimacy. Japan's new legislation builds on that foundation by adding international regulatory recognition from a jurisdiction that other major economies frequently look to as a model. The growth of XRP ETF products gives institutional investors proper access through familiar regulated channels, rather than forcing them to navigate crypto exchange infrastructure directly. And the XRP Ledger's continued development ensures the network itself remains competitive. These aren't isolated events. They're connecting pieces of a broader picture that is becoming increasingly difficult to dismiss. The honest takeaway from last week's 8% move is not that XRP suddenly became a different asset overnight. It's that several important developments, some of which have been building quietly for months, converged at the same moment, and the market reacted to that convergence in a way that was actually rational and justified. The Japan bill had been working its way through the legislative process. ETF products had been accumulating inflows. The macro situation was set up for a positive resolution, and when those pieces clicked into place simultaneously, the price moved in a way that reflected the genuine change in the fundamental picture. Whether the momentum from here leads to a test of higher levels or a period of consolidation first will depend on how XRP holds its technical support and whether fresh catalysts continue to emerge. But the foundation being built underneath this asset right now is more substantial than it's been in a very long time. That's what this week's story is really about. And that's why it matters for anyone paying serious attention to where XRP is heading.